Joining us now, BD8 Capital Partners CEO Barbara Doran. Barbara, thank you so much for being here. Can you explain that thesis to us?
Yeah, basically, I'm still, even though the growth trade looks like it's getting a little long in the tooth, I think it's a little too soon for cyclicals. Even though we've seen good economic numbers, as Carl mentioned this morning, we've seen, good jobless claims, good durable goods numbers, all this sort of thing. Typically, you see cyclicals perform when you're seeing the economy growing. And the economy, despite the good GDP number, I think is still slowing. The Fed is still trying to slow it down. And I think what you're not going to, people are still looking for maybe a recession out next year, but I think that that is in question. I think we could have a soft landing, but it's too soon for cyclicals because the economy is still on a slow growth path.
What do you think is priced into the markets right now? Mike was just talking about sentiment being somewhat measured and somewhat reflective of the fundamentals on the ground.
Yeah, it's interesting because, the Fed was very hawkish, the other day and talking about possibly 2, and some people think even 3 more rate hikes. But the fact is we are closer to the end of the rate hikes. And I think Powell made sure that we understood that. Last year was very rapid increase. He started 25, 50, then 475 in a row, then started tapering down. So I think even if we have 2 more rate increases, and I think we will have 25 bips in the June meeting, I think that's pretty much discounted in the stocks right now. And so it's a question of, you're starting to see people look for the laggards. They're looking at cyclicals, consumer cyclicals, trying to find the areas that have not run yet. But I think at best those are a trade, even small cap, because I think there's still vulnerability in the economy. We will see slowing growth. We haven't seen the lagged effect or what could happen in terms of credit tightening.
So how defensive do you get? You go back to Staples?
No, Staples, that trade is over.
Yeah.
I think everything is expensive. I think, for me, I'm long a lot of the consumer discretion, names like even Walmart, which is not a big grower, but is a consistent grower, and they're doing everything right. I think you stay in the growth trade, and I think this AI trade is not over. You saw what happened with NVIDIA yesterday. It opened down, oh my gosh, China, but there is so much demand, and this AI trade is really just beginning. It's not a one-and-done kind of thing. And so I think for names like NVIDIA or Microsoft, we're going to be beneficiaries of this. You will continue to see earnings come up so that they will grow into these PEs. So I think there's still more to come there. And it's a question right now, where do you buy? I think if you don't own NVIDIA, you should buy a little bit here and then wait for a bit of a pullback, but you're not going to get a big pullback.
Really? So you think the best opportunities are in the past on names like that?
I think so. Because if you want to look for the cheaper stocks, that is in the cyclicals and the value-oriented, but I really don't see the upside there. And I think there's danger in the second half in terms of those type of names as we start to see more of an economic slowdown.
With consumer, you like Walmart, but you also like Lululemon, which are on kind of opposite sides of the consumer income spectrum. What does that say about kind of your expectation for the plight of the consumer moving forward?
Well, I think Walmart is more about my expectation for the consumer than Lululemon, because I think you have to be very stock specific now, and the ones that have their own growth metrics. And Lululemon, I've owned for some years. I had not added recently, because, it's expensive. But the fact is, when you saw their most recent quarter, up 24%, and China up 79%. And that's where right now it's only 8% of their overall sales, but they're going to be expanding there. So that name has growth coming on so many drivers for so many years. And for 20 years, they've put up year after year double-digit growth. So you have to, I think, names like that. Walmart is more a safe and steady, but they're also gaining share. It is not just an old stalwart that's not innovating. They are innovating in a big way in their e-commerce, their digital platform, the entire thing. So I think that's, and Walmart's not up that much this year. It's up, I think, 9%. So I think that is a good placeholder and will be a good compounder over the many years.